space, which is surely away from quiet, is cement. So let's talk a little bit more about that. We've got Rakesh Arora, founder at Go India Stocks, joining in on the show as always. Rakesh, hi, morning. Good to have you on the show. Rakesh, cement prices have fallen further in the month of June after the slew of attempted but unsustainable price hikes, right, in April. Now with the onset of monsoon, where is it that you see cement prices headed? Rakesh, you'll have to unmute yourself.
Actually, I'm unmuted.
Yes, now I can hear you. Go ahead.
Okay, so I was saying that monsoon season means lower demand for cement companies, and given the way there's a lot of competition between the two major players, cement prices are likely to remain muted during this quarter. But it happens every quarter, every year. So one has to look at YOY changes. It may not be that dramatic as compared to last year.
Okay, so now that price hikes are not really expected anytime before the second half of the fiscal or, for the full year, how much more cement price hike should one expect?
So currently, the way things are, the large cement companies would be doing closer to 1,000 rupees per ton EBITDA margin, and smaller companies would be doing anywhere between 500 to 700. So this is still a sustainable price. So I think prices will move down further in the next 2 to 3 months, and that might galvanize the industry into taking some action and taking price hikes. So I'm expecting that maybe September, October, we might see some price hikes coming in.
Morning, and wanted to understand what the outlook is, Rakesh, when it comes to demand recovery for the months of May and June. That's been pretty strong. Do you think that for H2 of FY25, an 8 to 10% growth would be a fair estimate?
I would say 7 to 8% would be a fair estimate because Q1 is likely to be weak. We had a very weak, May, and things have recovered in June. So probably we will end up the first quarter at around 5 to 6% for the industry. And given that we're expecting government to really push for execution, and budget is also due on 23rd, so things should recover on the infrastructure side, and probably will end up at 7 to 8% demand growth for FY25.
Okay, and what about the 28% GST on cement? Infra industry experts believe that that's going to be unreasonably high. It could come down in the upcoming budget. Is that what you're expecting as well? Is there anything else that you're expecting when it comes to the upcoming budget?
No, we are not expecting any cut on GST on cement. It's a very touchy topic. I mean, obviously, 28% is a very high GST number for a thing like cement, which is an essential commodity. But I think government would be wary that if they cut GST, it will not be passed on. That is number one, and number two is that it's a big revenue loss. So I think it will take some more time for government to digest, and plus you need to have a consensus across the states to cut GST. So it will happen in a GST council meeting rather than in budget.
Yeah, absolutely. The other thing, which has really stood out, Rakesh, for the sector has been consolidation, right? Because that in the sector is clearly now accelerated and picked up pace. Reports and market chatter is now suggesting that it could be Orient Cement, Saurashtra Cement, which are also now on the block. In view of this, how is it that one should look at, this entire consolidation theme from an investment point of view?
So there's no denying that the top two majors are on prowl and they are looking to snap up capacities whichever is available. But they have also been very sensible in their acquisition till now. They have been buying assets at a very reasonable valuation of around 80 to 85 dollars per ton. So I expect that trend to continue. So from an investor point of view, while it's difficult to time it and pinpoint it, but if one understands that this company might be open to sale, and if it is available below $85 per ton, maybe there's a scope to take a punt there.
Right. But how the current valuations of stock prices looking, if you've been tracking that, and any stock-specific preferences that you may have for our viewers?
Meaning, obviously, there are a lot of names in the media which are buzzing. So you just need to go and check the valuations about them, and position yourself appropriately. But from overall market, overall cement sector perspective, I think the top two are the companies to watch out for in terms of investment. These are growing at industry more than industry average. They are consolidating. They are price setters. They are cost leaders. So I think investors are better off sticking to the top majors here.
Okay, and what about, let's move on from cement to the metals basket. With Chinese demand rebounding, what is the outlook when it comes to commodity prices that have been range bound?
So while Chinese demand hasn't really rebounded as much, there's a lot of hope from the plenary session, which is expected later this month, that there might be some clarity on the strategy will come out in China. And maybe they might, come out with policies to restore demand. Having said that, this quarter is going to be fabulous for all the base metal companies because, aluminum prices have jumped up quite massively, and so has alumina. So all our three base metal companies are likely to report very strong earnings. Even steel companies might have a little bit of pop, QOQ on terms of margins because there was slight increase in long steel product prices, and raw material prices were kind of benign. So they might also benefit a little bit. So from a quarterly perspective, metal stocks are looking way better than cement.
Again, any preferences within metals? Ferrous, non-ferrous?
Yeah, so see, non-ferrous is where all the action is happening and where the future lies. So probably those are the stocks which are going to outperform as compared to ferrous ones.
Just wanted to know what the outlook is. I know I spoke about that, Chinese demand. What I meant to say was, when is it that you're expecting a rebound to come in when it comes to Chinese demand, and what is the outlook or the repercussions of that you see on prices?
So that scenario is getting a little bit complicated in a way that a lot of countries are trying to impose restrictions on Chinese imports, and that is going to play out on China's economy. So the domestic demand is already running at full throttle in terms of what they are doing on renewables, infrastructure building, etc. But the export thing is the major, kicker in terms of demand for them to go from the current levels. So, given the political situation globally, I think, China's exports are not going to be that strong. And that would mean that probably the demand for commodities may not be that strong. Also, remember that rest of the world doesn't have the wherewithal to really grow at the speed at which China grows. So this whole renewable theme, etc., is going to be a little bit slower if a geopolitical situation takes over and exports from China is reduced.
Okay, Rakesh, so great to have you on the show, and thanks for highlighting both cement as well as metals and where the sectors are now headed next.
Thank you.
Okay.
If you like this video, then like, share and subscribe to ET Now.